let's get to a company that reported today, which, to your point, Luke, is finding it difficult to provide guidance going forward. I don't think it will come as any surprise that it is in the the retail space. So while we saw Adairs delivering record full year numbers, online sales really doing well as well, up by a third. The latest lockdowns hurting sales into the first 7 weeks of fiscal 22. Still, shareholders getting a 10-cent final dividend, down from 11 cents. Total dividend, though, 23 cents per share, which is more than double the payout in FY 2020. Look, Luke, I'm going to start with you on Adairs. I will timestamp this, saying that shares are up by about 3.5%, just past 12 p.m. on this Friday afternoon. The commentary coming from the CEO was, yes, lockdowns are unknown, but it still fully believes that it will continue to benefit from this home as a sanctuary trend. A place that you're not just coming into at the end of the day, but you're wanting to make comfortable because in large part, you could be spending most of your time there.
Yeah, look, there's a couple of trends benefiting the company, and even with stores being locked down, full credit to management. They've transitioned to their online channels, absolutely fantastic. You touched on it at the end, Dean. Sales were up like 100 and something % for the year. Look, the result today was largely pre-flagged, so the headline numbers are not too surprising. About 30% revenue growth, 80% profit growth. I think, as you touched on, all eyeballs went straight away to the outlook statement and your FY22 update. And they look pretty strong to me. I mean, look, they've excluded the stores that are being forced to close because of COVID. But excluding that, they're doing 5% like-for-like sales. And again, the online channel continues to do really well. I mean, still growing at 13%, despite cycling 130% like-for-like. So, it's a really well-run business. And I think there's the potential for the market to sort of lose the forest between the trees here. Like, so much focus being put on the macro and what does the short term look like cycling these COVID comps. This is a really, really well-run business. Full credit to the management team. Like I said, they've genuinely turned it into a true omni-channel retailer. 37% of their sales coming from online. Their Linen Lovers membership program is fantastic. They generate the majority of their sales from these members. That continues to grow. So they're really giving value to their customers. I really like the business. Look, the PE, it trades at about 10 times now. How you want to extract that number moving forward is a little bit difficult. But, overall, I think this is a really well-run business. And I'd back management team to sort of get you through any sort of, turbulence in this sort of post-COVID period.
Shares at $3.82. Would you be buying now?
Yeah, look, I honestly would. I'd take a longer term view. Like I said, it's hard to sort of to say, tomorrow or over the next few months, what will it look like? But it's a management team that's executed so well, and I back them to do that. So if you're buying today on a 1, 2, 3 year view, I think you do really well, even at these prices.
This time last week, Claude, we were talking about baby bunting, category killer, done really well through the pandemic. But again, when it comes to these retailers, it's where is the runway from here? Where's the room to grow? I'm sure you've read the commentary coming from Adairs. I'm sure you do enough research just looking around yourselves as well. I mean, do you think that there is still life left in this whole transition to really kitting out our homes?
Yes, I think that, this is a fairly good category in retail, but there's a fair bit of nuance in terms of how I would look at Adairs, because what Adairs is a fairly, in my view, modestly priced retailer, and I owned it up until earlier this morning because basically it was so cheap based on earnings multiple and dividend yield, and it gave my portfolio some balance, because obviously I'm skewed towards high growth, high multiple stocks. But for me, when I bought Adairs about a year ago, I was paying mostly below $3.50, and my basic view was basically that this would rebound, and it's roughly performed in line with the overall market. So it's not some great success for me. The reason I've sold out my final package today, I sold some a little higher previous to earnings, is because I think that this time the lockdowns and Delta and all of those things are going to be much worse for Adairs than they were previously. When we had the lockdowns last year, there was very generous support, and after a quick couple of weeks of panic, everyone kind of settled into the fact that many people had more money than before, and they were actually better off. But it's not been so strong this time. So I have a bearish outlook for a company like Adairs right now. And so, and given, retail for me is always only a trade, I'm always looking to time that kind of investment. So I'm all out of Adairs now, not because I think it's bad business. I actually agree with everything Luke said, except the would you buy thing. I think that if you wanted to buy and hold this one for the dividend for 5 years, you're probably going to do quite well, or definitely, it's not a bad idea. But just the way I approach retailers is more I'm trying to pick, because they're so lumpy and things can change so quickly in retail, as we often see. So for me, it's time to leave Adairs behind with lockdowns going harder for longer. I think we've just had an extension in Sydney, and honestly, I think we're going to see more extensions and more lockdowns in more states as Delta spreads throughout Australia. So, yeah, look, not a great time for me it's a sell for me basically, but not because the company's bad, just because of the macro.
That's okay. We know that in the context of this conversation, oftentimes we're talking, clearly it's information only. It's not advice for somebody's specific circumstances, and Claude speaks to his circumstances, which we do appreciate.